Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. These are the kind of weeks and time windows Uncle Frank lives for. Last week was kind of a dud, but this week's window is fraught with danger for our enemies, the predatory short hedge funds, but not for us. Why? Because we're not leveraged over 50 to 1. They are. Our business is recovering and expanding nicely. Our business actually thrives during recessions, so Uncle Frank is cooler than a fan. AMC shareholders don't have to worry about billions of synthetics being exposed. The hedgies do. The U.S. government, prime banks, the Fed Reserve, the U.S. Treasury, and even foreign governments are pushing back on the leverage levels of the hedge funds. Regulators are demanding stricter rules and more transparency, and Kenny and the boys are complaining about it. So sit back and relax. Let's take a look at this week's time window and hope that a black or white swan, doused in lighter fluid with a stick of dynamite in its ass, flies right into the middle of all of it and spoils the holiday parties for the hedgies. Now, this has nothing to do with AMC. But Uncle Frank's favorite cryptocurrency is Ripple's XRP. And according to 25 Hours Awake, confirmed report, the final Ripple Labs versus US SEC settlement hearing will take place on December 11th. The end of the XRP lawsuit could be within days. At the time of this recording, XRP is up over 10.75% for the past 7 days and is now the fourth largest crypto by market cap on the planet. Well, this Reuters headline says it all. Year-end rally in U.S. stocks faces twin tests as Fed inflation data loom. The Fed Reserve's last monetary policy meeting of 2023 and the U.S. inflation report in coming days should test a stock market rally that some view as stretched following weeks of gains. Bets the Fed will begin cutting interest rates sooner than expected have fueled a surge in U.S. equities, which received a tailwind from a rapid decline in Treasury yields. The S&P 500 up nearly 20% in 2023 after a monthly gain in November that was its biggest of the year. Let's get into it. Now, last week, according to Yahoo Finance, we had an unexpectedly warm jobs report. Unemployment declined more than economists had predicted, showing continued strength in the labor market. For the Fed, it's a sign contrary to the recent indications that the economy has been softly cooling. Now investors see the chance of a rate cut in early 2023 as just a little less likely. Uncle Frank is saying Q2 unless we get a disaster. But on Tuesday, December 12th, we kick off the action with the entire CPI group of data at 8:30 a.m. Eastern Time. I'm sorry, but in my opinion, it's this reading that will determine the immediate direction of interest rates for the Fed. Now let's throw this powder keg onto the runway. Beginning on Tuesday, we have the two-day December Fed meeting, which culminates with Jay Powell's comments on Wednesday, December 13th at 2 p.m. Let's put that shit on the calendar. Now, guys, on Wednesday, before we get the FOMC's rate decision at 2 and then Jay Powell's press conference at 2:30, at 8:30 a.m. in the morning, we get the entire Producer Price Index group of data. Uncle Frank, why are you excited? Economic data like this is released all the time. Guys, you have to imagine what it's like to release this data when there's a crisis going on, when fear, uncertainty, and doubt rules the day. You see, when you're leveraged to your eyeballs and caught in a storm, people begin to blame you for their problems. They start looking for scapegoats. And while every politician loves cashing checks from hedge funds, it's my belief, based on the current conversations being had about leverage, that it's the hedgies that will be blamed for some of our problems. And when you see calls to ban short selling of financials, that will be the final sign that it's on like Donkey Kong. Now, so far, Thursday the 14th is a quiet day, but at 8:30 a.m. Eastern Time, we will get initial jobless claims from the Department of Labor, and this will be more scrutinized because of last week's employment data. We will also see U.S. retail sales for November, and this gets more important as we proceed through the holiday season to gauge the resiliency of the U.S. consumer. I'm going to complete the calendar, but I want to point something out before we continue. Breaking this morning from Financial Times, UBS hit with $400 million of Credit Suisse-linked property costs. Bank had to break leases to vacate defunct rivals' buildings. From the article, UBS has begun transferring thousands of Credit Suisse staff to its own buildings and removing the fallen bank's logos from its UK headquarters in Canary Wharf and New York head office in Madison Avenue. Now, for those of you that don't know or don't remember, Credit Suisse was a notorious short seller of AMC. They famously put a 95-cent price target on our stock. They got blown up by their hedge fund client, Archegos, and were subsequently absorbed by UPS. And I wanted to review the credit default swap headline history before we go back to the calendar. For those of you that think Wall Street types can never be defeated, this was a 167-year-old Swiss bank that's now history. AMC is still kicking. Let's start out back in October of 2022. UBS credit default swaps rise to highest level in decade amid Credit Suisse woes. Then in December of 2022, credit default swaps blow out on Credit Suisse as its stock price hits an all-time low. And then in March of 2023, Credit Suisse default swaps are 18 times UBS, 9 times Deutsche Bank. Also that month, cost to insure UBS debt against default hits decade-plus high after Credit Suisse deal. Now let's move into June of this year. Credit Suisse sent thousands of trades late to trace, FINRA says. U.S. brokerage unit fined $900,000 for alleged rule violations. UBS agreed to buy Credit Suisse in March amid banking crisis. Now, I don't know if you remember, but Credit Suisse didn't report any short positions for 7 years, from like 2015 to 2022. And then now, in July of 2023, credit default swap panel rules UBS is sole successor to Credit Suisse after merger. Okay, so they're completely responsible now for whatever Credit Suisse had. At the bottom of the page, you could see the near $1 trillion equity swap basket entry that apes have been talking about for a long time now. I don't know the exact disposition of this contract, but it does expire on this coming Friday, the 15th. So just to be thorough, let's stick it on the calendar for fun. And there it is, guys. The time window week that includes a possible final settlement for XRP, the Consumer Price Index, another Fed meeting and rate decision, the Producer Price Index, jobless claims from the Department of Labor, a $1 trillion swap expiration, and Willy Wonka dropping on Friday. But now let's review what's not on the calendar. All the swans that might drop by for a visit while our enemies attempt to tiptoe through this week. Now, guys, this is from Bloomberg yesterday. Pay attention. Hong Kong stock slump triggers wave of brokerage closures. The Hang Seng Index is set for a record 4th year of losses. A historic slump in Hong Kong's $4.6 trillion stock market is rippling through the city's financial industry. 30 local brokerages have closed down this year after a record 49 shut up shop in 2022, according to Hong Kong Stock Exchange data. That comes as Wall Street banks lay off deal makers due to a plunge in initial public offerings. The Hang Seng Index is heading for a fourth year of declines, the longest losing streak in the gauge's history, and fell to a one-year low this week. Average daily turnover is down 14% compared with the 5-year average, and the IPO market having its worst year since 2001. Now, subscribers to this channel know about the Evergrande train wreck that was postponed again until next month. But let's add this headline to the equation from Shitzinga. Full banking collapse. China worries pile up as hedge funder sounds alarm. As the U.S. economy continued to show signs of strength, many investors remain concerned with China's economic outlook. One hedge funder, Kyle Bass, said China was experiencing a, quote, full banking system collapse in a recent post on Twitter. Bass, who is the CIO of Heyman Capital Management, linked to a recent Reuters article that highlighted some of China's economic concerns. Debt for the second largest economy in the world has been piling up, with local Chinese government debt reaching more than 12 trillion, or more than 75% of the country's entire economic output. You know, guys, I think China's economy might be worse than they're leading on. Today, from Reuters, China's consumer prices fall fastest in 3 years. Factory gate deflation deepens. There's the D word. Guys, my other concern about the Chinese economy is what its government may do to cover up its policy mistakes. Like our leaders in the West, politicians love to start wars as a distraction from horrible economies and failing policies. This headline from Guardian this morning. How much trouble is Xi really in? Outgunned Taiwan may be about to find out. Since taking power in 2012, Xi has cracked down hard on dissent, difference, and debate as part of a drive to tighten Communist Party control over all aspects of Chinese life. That may be coming to the United States soon. This might have worked, Osnos argues, had he delivered prosperity in exchange. Instead, the economy is struggling. Unemployment and debt are high. Business confidence is low. And China is at odds with the West. Subterranean discontent among the public and elites occasionally breaks the surface. Guys, I was hoping China's economy would keep them from invading Taiwan, also just to avoid the backlash from the rest of the world. But there are whispers that the old technique of starting a war as a distraction may be shaping up. Beijing regards self-ruling U.S.-backed Taiwan as its own property. Xi has threatened to seize the island by force. China mounts almost daily military provocations. It says voters face a choice between war and peace when deciding whether to keep the pro-independence Democratic Progressive Party in power. The DPP currently leads the polls. Now, is this a bluff or mere rhetoric? Or will a weakened, insecure Xi needing a big win to see off his enemies and stabilize his regime? And mindful of U.S. election year distractions and wars in Europe and Palestine, will he risk it all in 2024 for a historic, legacy-burnishing reunification triumph? Most Western analysts say no, but that's what they said about the Ukraine invasion. And from Bloomberg just a couple of days ago, Bank of England rings alarm bells on hedge funds' risky trade. Net short position in Treasury futures jumped to $800 billion. From the article, the Bank of England stepped up warnings about hedge funds shorting U.S. Treasury futures, saying its measure of the net position is now larger than before the dash for cash crisis in March of 2020. The net short position has grown to $800 billion from about $650 billion in July, the central bank said, citing calculations based on the CFTC data. That suggests a jump in the so-called basis trade, which is where investors seek to exploit price differences between futures and bonds. The trade is particularly risky because returns are bolstered by borrowing money in the repo market. That tends to work well in a low volatility environment, but can backfire if the market moves fast and can even disrupt the smooth functioning of the financial system. You can bet on that. Okay, now on to the United States. This article from MarketWatch titled "Something Strange is Happening in the Financial Plumbing Under Wall Street" is about a suspicious one-day spike in the secured overnight financing rate. I want you to know about this just in case one shows up during this week's time window. From the article, overnight lending rates in an esoteric financing market frequently tapped by banks, hedge funds, and other borrowers spiked last Friday, prompting comparisons to a surge in short-term lending rates in September 2019 that forced the Fed Reserve to step in to ensure that credit would keep flowing smoothly through the U.S. financial system. Now, under the heading, "Spike Rattles Wall Street." 6 basis points might not seem like much. It's equivalent to just 0.06 of a percentage point. Such a swing would barely register in the U.S. equity markets. But when a financing rate that undergirds trillions of dollars worth of financial products and short-term loans suddenly sees a move of this magnitude, Wall Street can't help but take notice. That is exactly what happened on December 1st, when the secured overnight financing rate, a broad measure of the cost for institutions, often banks, but also money market funds and hedge funds, to borrow money overnight using treasuries as collateral. It suddenly spiked from 5.33 to 5.39, according to data collected by the Fed Reserve. Although the spike quickly faded, some analysts expressed concerns that it could happen again as the Fed's quantitative tightening campaign heaps more stress on the nearly $26 trillion market for U.S. government debt, and by extension, the lending markets where these bonds are used as collateral. So how is the movie and theater business doing? Let's review this article from Screen Rant. 10 recent movies that broke incredible box office records. Box office records shattered. Cinemas make a comeback post-lockdown with impressive earnings from a variety of genres, including animation, superhero, and biopic. Following the end of the COVID-19 lockdowns, cinemas have truly made a comeback, with many of the most impressive box office records being smashed since 2019. The box office is much more useful than just offering a bird's eye view of the highest grossing movies of all time. It also provides details about specific genres, earnings over holidays, or specified periods of time, and how quickly films are able to reach specific figures. So are the theaters dead? Is the world's largest theater chain only worth 70 cents per share on a unneeded split basis? You tell me. Check this out. Now, this data goes out to every hedge fund idiot that demanded we believe the theaters were dead and streaming at home is the only entertainment future we deserve. We should also send this to the authors of the thousands of hit pieces that ignore all these milestones while writing their articles designed to frighten shareholders and manipulate the stock price. Since 2019, cinema has seen the highest grossing movie of all time change hands twice. New record earnings for a PG movie and also for an R-rated movie, as well as record high earnings from female directors. The films that claim these records also come from a wide variety of genres, with animation, superhero, biopic, action, and adventure comedy. As the box office continues to evolve and filmmakers become more innovative and creative, the landscape of these records and the films in the top spots will likely change, but it still provides a great snapshot of contemporary popular culture. Now, check this out, guys. 2019, Avengers Endgame. Highest opening weekend and briefly, highest grossing movie of all time. From 2019, The Lion King, highest grossing PG movie of all time. From 2019, Joker, highest grossing R-rated movie of all time. And then there's Frozen 2, highest grossing animated movie of all time. Now we're in 2022, Top Gun Maverick, highest grossing Memorial Day weekend opening. Also, same year, Avatar, The Way of Water, first post-pandemic movie to break $2 billion at the box office. And now 2023, the Super Mario Bros. Movie, biggest animated opening weekend and highest grossing video game adaptation. And Spider-Man Across the Universe 2023, highest earning animated comic book movie. And then there's Barbie, first $1 billion movie by solo female director and highest grossing live action movie by a female director. And then Oppenheimer, highest grossing biopic of all time. You know, it looks like this business is doing a lot better than some of the crap Wall Street shovels at the investing public, doesn't it? So how are we doing right now? Headline from Essence. Beyonce's Renaissance film pulled in 20 million plus this weekend, the only movie to do so in 20 years. Beyonce's Renaissance film has broken a record. The documentary following the making of her most recent world tour opened with 21 million in North American ticket sales per data from AMC Theaters, its distributor. The historic feat comes at a time when movie-going earnings are notoriously low during the early holiday season. What's more, it's the first time a film has raked in more than 20 million on this weekend in 2 decades. Now, guys, I've got a question for you. Don't you think AMC Investor Relations should mention this? They won't. Ever wonder why? And here's more current good news about the Big Lizard. From Collider, Godzilla -1 domestic box office scores historic haul. Godzilla has become the highest grossing live-action Japanese film in North America. The film had the biggest debut for a foreign film in the U.S. this year. Are you guys getting the impression that the financial press parasites that are paid to smear our company are full of shit? From CBR, Godzilla -1 breaks a 19-year domestic box office record. You know, I hate to break it to you, hedgies, but we didn't go bankrupt. We did return to profitability, and we will surpass our pre-pandemic performance of 2019. So you're going to have to come up with another bullshit stick for us to jump over. Now, this is a very important slide. I really hope you're still with me. From Collider, Napoleon global box office conquers new heights. Napoleon earned $35 million in its second weekend, bringing its worldwide total to $136 million in just 2 weeks. Now here's the important part. The film is essentially a streaming release from Apple, with its theatrical run serving as advertising for its eventual release on Apple TV. Now, I know a lot of you wonder why I cover this kind of stuff, but do you understand that strategic alliances between the theaters and the big streamers is the very last nail in the coffin of our enemies? When all the streamers finally realize dropping their original content in the theaters first is the proven path to the highest profits, we're done arguing with Wall Street. It's over. We win. AMC closed at $6.93, up 11 cents or 1.61% Friday after a day of being manipulated and anally violated by the bad actors on Wall Street, who closed it just under max pain, exactly where they needed it to close to steal the maximum amount of premium from retail option investors. And look, this fancy AI price predictor from CoinCodex, I'll give it a shot. According to our current AMC forecast, the value of AMC shares will rise by 8.8% and reach $7.54 per share by December 14th. According to our technical indicators, the current sentiment is bearish, while the fear and greed index is showing 39. That's fear. AMC stock recorded 15 out of 30, 50% green days with 18.16% price volatility over the last 30 days. Based on our AMC stock forecast, it's now a good time to buy AMC stock because it's trading 8.09% below our forecast. Now, Uncle Frank would only add that I'm delighted we're still over our 200-day simple moving average. That's at what, 637? I want you to watch the 50-day SMA. If we get a rally, I think that's currently 858. If we can break that and hold it, that's when things could get interesting. And of course, here's the disclaimer. This is not investment advice. The information provided is for general information purposes only. No information, materials, services, and other content provided on this page constitute a solicitation, recommendation, endorsement, or of any financial investment or other advice. Seek independent professional consultation in the form of legal, financial, and fiscal advice before making any investment decision. Better believe it. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.